Alright, good morning. You guys hear me in YouTube land? Please text and let me know if you can hear me so we can get started.
S&P 500 down 0.3%, Nasdaq down 0.09%, and the Dow down at 0.19%.
Can anyone hear me? YouTube. Someone type in the chat. You can hear me. I greatly appreciate it. I guess I'll chat. You can hear me. All right. Thanks for the participation. Thank you guys. I just saw that. I gotta realize it's a little delayed on YouTube. That's why no one responds when I'm talking live, because it's delayed. I'll be back in a minute and a half to this disclaimer.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites are digital and used for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and holds Apple Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without preservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results of certain inherent limitations. Some features described herein.
105
No representation seen in neither any accountable is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading required to completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results.
NQI size
Because these trades
by
have not trading
NQ,
the hypothetical results may have to be overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results at all, of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. Analysis themselves, I share trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach trades and identify specific areas to trade and manage themselves, but ultimately the decision is yours. Trading is extremely risky, and if you decide to follow my personal trades, you do so at your own risk and can potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet, and I use enter zone values and ATR values to help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices that I trade, whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm zone prices and to grade the drawing zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for long and short positions depending on which way you personally decide to trade. Alrighty. Good morning. Good morning. Alright, so we got some activity. Things are starting to pick up a little bit after the summer doldrums. Market actually sold off a little yesterday. It was quite shocking. Anyway, got some major bias hitting this Nasdaq. So, threshold that I trade off this Stop Iceberg subchart
NQI iceberg by NQ, 166 contracts.
is 150, and you can see this area. You had close to 600 there. You had another 400 here, so that's already 1,000, and then you have another close to 300. So you got 1,300 bias in this area. That is very, very important information, right? So this is the whole idea, the whole reason we use this. This is the activity that drives markets, right? Somebody's selling this right now, and somebody big is absorbing all of these sell orders. So somebody's going to be right out of here, somebody's going to be wrong, and we're going to hopefully take advantage of it. That's the whole idea behind using this information, which is the most powerful information that I have ever seen in my futures career, trading career. And it's all about applying this information in important areas, right? So I have my important areas that I use. You may have different important areas, but if you can confirm those areas with real-time activity, then you have yourself an edge, as long as you know how to trade the area and the activity. So I'm gonna incorporate all of this. Obviously, you could try to narrow it down and go to the most recent volume event. That's the rule of thumb, is to trade the most recent volume event. But I mean, this is all basically condensed. If I can find the can't find the thing to drag this zone down. Hold on here. Let me just have to delete it. But you got to. most of the stuff I do is black and white with my, with these areas and my spreadsheet and everything else. But there's times that you got to decide, hey, am I going to make this one, just trade off of this zone, for instance, or make this one big zone? I just want to get all this one area because there are some loaded up traders. This is another. This is also this, like I was talking about, an important area. This is an inflection zone, so I draw these every day for my trade room and for me, obviously, to trade off of. You can see this zone was important, so we gapped down overnight, bounced off of this zone, and we're right back here where this market gapped down, where it built a little balance yesterday, and it was in this prior zone here. So this zone was important, a bunch of different reasons. The bottom of that balance area, and then a lot of stuff happened here. Directional conviction, I mean not directional conviction, a little bit, but buying tail, gap up, which is directional conviction. We ripped through it yesterday, kind of hung in it, and built balance here, and gap down again. So this is a very important area. So this is what I'm talking about. I know this is an important area going into the morning, and then when I get the volume event, if it follows, especially if it follows my thesis, I'll trade bigger size, but I'll trade either way in these inflection zones. But they're usually fade trades, right? So they're moves into the zone, and I fade it. Kind of like this one down here. This one, there was a setup down there, but it wasn't bullish, so I didn't take that one. But this one's definitely potential trade, and there's some whopper ice in here, so you can expect this thing gets motoring. You should have a big move out of here. So enough of the chirping. Let's get the zone in, and we'll figure out where we can trade this. 15.44250 is the top of the zone, and 2350 is the bottom of the zone. So it's quite a large zone, but I've incorporated, like I said, 1300 ice in there. 1300 trap traders potentially. 15, I already forgot my zone, as usual. 44.5. Struggling. Hold on. 423.50. Let's put the bottom in first before I forget that one. And the top of this zone is 42.50. I don't know why I couldn't remember that. And then the other important thing that I look at is the ATR, the average true range. I use a 5-minute ATR of 14 period wilders. It's ATR, it's default on Thinkorswim. You can get this set up on any platform. And so it's just a 14 period 5 minutes, so it's just telling me the current volatility. So you can see right there in the middle of the chart, it's telling me this market's rotating about 25 points every 5 minutes. Very important information to have. All right, so this is an Izzy zone, so I will short this aggressively out of here. We'll talk about my different types of entries. I can short at 394.50, and I can put on 4. So I'm going to set that up now, and I have different trading accounts, Apex accounts set up for my individual strategies that I take. Get this in real quick. So this is Izzy. So you can see here, these are my different trading strategies. I'm going to be adding many more. These are the initial ones that we put up. I've got about 300 in my brain that I've always traded, but I started putting these on paper for my trade room, and then I assign Apex accounts to each strategy. So number 68 is Izzy, so I will short at 94.50. I'll put on 4. So that is working for the aggressive entry. Now let's see what we got going here. So this is the usual ATR retest, it looks like. Let's see what the full ATR was. 98.25. So we have a trade in my room as well. It's more of a short-term scalping trade because I know you guys love scalping it's really fun against algos. But this would actually help you. I mean, you can't compete with this type of strategy. This one is, we take, for the 5+ years I've been doing these webinars for Bookmap, I've always said you get the volume event, and it's uncanny how often the market will retest that volume event. I say it's 70+% of the time, just my personal observations. But, you never know how far will it go before it retests that. So we have a strategy where we'll take the one ATR, back to the zone, the 2 ATR back to the zone. So all these prices populate when you plug in the zone and the ATR. So this is my spreadsheet that you get when you come into my room. You get access to this. I'm going to have a. It was supposed to be done this week. I'm working with you can see this. I'm working with this guy at Upwork. He's in India. He's helping me build the website for the ATR version. So, a lot of people can't get in the trade room. They have normal jobs and want access to the spreadsheet. So it'll be more of a subscription-based type of thing. That should be up and running. And then I'll also have these inflection zone charts. That'll be part of the website too. So, if, in my trade room here, I post these every day. These are the inflection zones that I was talking about. You go over here. Each one of these I post, then you can pull these up. This will be on the website. I don't know why this isn't populating. There you go. But then you can pull up these numbers and then, draw your zones where my zones are. I mean, you can draw these yourself once you understand what you're doing, but it's just a quick way to get these important areas because they are ridiculously important and incredible trading areas, especially when you get your volume events, and that's what we're about to trade here off of this bias. So now this isn't actually a broken eye setup, so I have 6 distinct setups that I trade off of. That's part of my SI indicator course. Speaking of which, let me get this. I'll put this in YouTube here. So that's the link to all my everything I'm using here, discounts to everything. And we'll go over some of this stuff. There's that. I'll put it in Discord as well. I don't even know if anyone's on Discord. Let's see. Yeah, there is. So I'll put that in the chat and Discord as well. All right. Let's take a look at some other stuff that we look at. Just want to see where we're at here. So Nasdaq's basically hovering around VWAP right now. So we come up with a thesis every day and try to come up with a thesis of what's going on in the market. You're, basically an opinion. And then the way I trade it is, I'm a day trader. I'll take longs and shorts depending on the volume events. Those are king. But if I get a thesis, say if I'm short. So for instance, this market profile is giving me the thesis of short right now, where it tried to break out of this prior market profile composite, and it's kind of failing and it's back inside. And then I want to see what it does here too. But this is showing me more of a bearish tendency, and the thesis for this stuff is this market gap down from this balance area yesterday. All I did is I just showed this, but this gap down, came back, retested, and it's starting to fail again. So my thesis is bearish, so I can trade. The way I do it is if I get my thesis lined up with the real-time volume events, if it's lined up, then I'll trade bigger. So I actually said I was going to trade 4 here. I'm going to actually up it to 8. Actually, we'll make it 7 because that'll be double size there. So the order's still waiting to go short at 94.50. The one thing you got to do when you have this spreadsheet is continually update your ATR until you get filled, because it does change. Right now it's not really doing much. So it gets 94. It did change a quarter, or actually two ticks. So I'll short at 94. This is also a potential BARF setup. So I'm trading, you can see algo guide. We'll get into this algo guide. This is exponential moving average. This is crossed and it's bearish, so I can trade out the BARF trade. That is this strategy. So it's basically any volume event that occurs, no matter where we're at in the chart. I take, if the market is able to go in ATR, which it did, the retest, which it did, failure, when it comes back, I go short. That's just, it's called the BARF. It's blind ATR retest failure. That's this. That's this one here. And you can see it's an ATR retest fail trade. So you see 2 different trades I'm about to take. One was aggressive the minute it broke out of there. I actually missed that trade. I should already be short. I just missed it because I was getting set up with a webinar. So that means the first break out of this zone, I should have been short. Right? Granted, I would save myself some torture here, but that was just a mistake. I could easily miss this trade and had it down here, and you guys would already hear me complaining for the day. See, what was this? Hold on a second. this was prior. This was an event earlier today. We'll keep that there for now. I don't want to confuse people, but we're trading off of this event. Anyway, I could put on BARF because it did the ATR retest failure. I should already be short the IZZY, but if it comes back, I'll be short IZZY and BARF. And I think, let's see if there's any liquidity below here, and I can put on the liquidity trade as well. So these are all distinct trades. I don't see any major resting liquidity. So I'm going to see the one issue with entering this trade. I'm probably going to get tortured here once I enter. So it's at 94. Well, that's right into the zone, so it's very likely to bounce off this prior volume event. That was this right at the open, right? So I'm okay with that. I mean, you could, if you want to really be safe, get it. I mean, you got to move your thing down 25, 30 points though to get out where you're entering outside of this zone, because so many times the market will bounce off these prior events. There's literally areas where, say I got short up here, I would get out of some of them at this prior event, right? And I hate entering right at it, or I try not to enter in it. But we're basically getting in right here, and 7 points lower is the zone. So I fully expect to get tortured on this short if I put it on. You know, like I said, you could say, hey, I'm not shorting in front of zones. I'll go under the zone, which is what I usually do. But it's too much. I just got to bite the bullet, right? If it was like 5 points, 10 points, I'd be like, yeah, I don't want to enter here. I'm going to move it down to here to get in. But this is, you know, again, 30 plus points. I'll just bite the bullet. If it bounces off that zone. So I gotta get that BARF trade in. That's gonna be a 7 lot as well. And that is number 69. And that's at 94. Alright, so those are working. So again, I'm gonna short that if it comes back down there. We will judge. Let me get my tick strike going, get some torture. Or as far as the essence, we're on here. I actually got to draw this. I got to draw this zone. This is where this gap down as well. But you can see it bounced off this zone. This is where we gapped up. This was a balance area. Actually, this is a bigger balance area. This was just a bigger zone, high volume node. Bounced right off of that. There was no volume event, but I'm just showing you. I mean, these zones are ridiculous. They're ridiculous in their own right. You can imagine when you get volume events in there, right? So that's why that's why I use them. Anyway, this is a return to this zone. This zone wasn't anything that important. It was a selling tail, directional conviction, and then it kind of launched from here. But let's see if it, you know, and with these zones, as with anything in trading, if we keep doing that, then I'm going to delete that zone. It's obviously not important, right? We want inflection zone. The way I should do this right now, which I think I'm going to, I just filled on that NASDAQ trade. You could make this a zone with this buying tail and where this market cap down from. But we'll see if it even makes it up there. All right, so I'm short. Now let's watch the market bounce off the zone and get tortured for probably 40 minutes. You know, if it rips right through this zone, that's telling you something as well. I'm not expecting that. You know, I am expecting to move lower because of this volume event is a bearish volume event. It's called broken ice. It's very technical, I know. Icebergs tried to hold the market up, 1,300 of them. They're not doing too well right now, so that's what I'm playing for. But I fully expect this to be torture fest for a little bit. It would help if they can start hammering these FANG stocks. That would help push this through here, but we'll see. And then the other thing you want to keep an eye on, then this new indicator is market pulse. I have it turned off right now because I got to toggle it on and off because it's on this sub chart and there's just too much on it here for me. That's actually the shorter term one. So this one's based on an hour. Very important information. So you can turn this on and get the volume. We'll put it on. I might have to turn it off. It gets a little annoying, especially with the tick strike. So this stuff is tick strike on steroids. I still like tick strike because they have the stocks. Bookmap will eventually have the stocks as well, the FANG stuff. I'm using both right now, but what I love about Market Pulse is it shows you these areas where traders were aggressive. As you can see here, this is these aggressive sellers. And I have this set, my settings for the Market Pulse are right here. So this is showing me, you can put this whatever you want, it's called the training period. So if you go over here and, so I have the longer term watt at an hour. And then you see, you check, there's 4 different options. You can just Google this stuff, go to Bookmap Wiki and it'll explain all these different options for you, but I'm using volume, pressure, and balance, and then I check that, and that's what shows up on the subchart. So it's showing me my trading period is basically how long. I mean, you can go all the way, for the last day, you can go down to 1 minute. I may have mine at an hour. I think that's a sweet spot because I want to know what's the most buying and selling in the last hour, the aggressiveness. So you can see these sellers were really, really aggressive up here with market orders, right? That's what triggered the ice. But as of right now, they look like they're winning. And shocker, shocker, this is struggling in the zone like I thought. But the point is, a lot of times you'll get these events happening in here, and without volume events, and we have actually distinct. I've come up with a few already. There's going to be a course on this here soon. Patterns that you can trade off of the market pulse. It's really incredible, and they just came out, I guess, with a web version. And you don't need CME MBO data for this either. I highly recommend you get the CME MBO data because you won't get the SI subchart, and this is the driver of all my trading is this information. But this information is good to know too. Now, this is more fleeting and short term though, right? Like, if I'm taking scalp trades off of this stuff, I'm not looking for bigger moves. When I see stuff like this, I'm expecting a whopper move because there's a lot of traders that are loaded up in here, and somebody's going to be right, somebody's going to be wrong, and that's what we're taking advantage of. But Market Pulse is the next best thing. It's incredible. I've been watching it for a couple months now, and there will be setups course coming out for that. As soon as I get my other course out, it should be out in the next few days. All right. It's pretty quiet though. Let's see. So I am short there. Now I got to put my stop in as well. Forgot to put my stop in, and that's where I was get burned. So I shorted at 94, stops at 72. So you can see here, I'm risking 78 points on this trade. People are like, what the hell? 78 points? I don't want to risk 78 points. Guys, you don't change, you don't impose your will on the market on what you want to risk, right? I'm risking 78 points based on the zone, size of the zone, the width of the zone, price-wise, and volatility, right? So it could be, if ATR was 10, right, I'd be risking 42 points. Well, what it changes? I don't care if I'm risking 42 points or 142 points. I just change my size. I don't impose my will. I don't even want to know how many of you out there are, I know there's a ton of you because I always get emails. I like your style, but I don't like how you have to risk, you're risking 78 points in the NASDAQ. I like to put NASDAQ trades on and risk 20 points to make 40. Great, but guess what? What is 20 points? That's your, that's what you want to lose. That has nothing to do with what's going on in the market. The minute you can grasp that, you're going to do much better as a trader. The market doesn't care. You only want to lose 20 points. Market cares about this stuff and volatility. So when I put trades on, I force the market to come all the way back, the ATR or whatever, however far it goes below there. But I want to see it has to plow through that volume event and get an ATR outside that volume for me to be wrong. And why do I do that? Because you're competing against these algos that when nothing's going on, like right now, you're going to get whipsawed. So how many traders are in this trade that, mirrored my trade here that are like, oh yeah, I got 17 points on this trade. I'm going to move my stop down to right here. Well, guess what? You've got about a 99.99% chance of getting stopped out, right? Just on random rotations. Algoville. Get your stops outside of important areas and stop trying to, even with the ES, I like risking 2 points. It's like, please stop doing that. That is number one. I mean, I do this rant every day, every webinar, but it's the most important thing you can be doing or not doing. All right, so there's Market Pulse right there. So I'm going to show you something here where I can peel out of some of these because this is, it's not a huge profit, but it's decent. Got almost, 24 points, 25 points in this trade. ATR is 25 points, so that's not a bad trade. Actually, this is the 5-minute one. Let's see what the 5-minute one looks like. So you can see the selling there. So what you can do is if you see, say you're short and then you see these sellers getting aggressive and it doesn't move lower, I don't look for it. Again, I have distinct patterns for these, but I want to see, so here's the Market Pulse area that just fired off, right? So if this market doesn't respond lower, and what the pattern is, it's just like these volume events. It'll move away a little bit. I don't have a set amount of points that it moves away, but you'll notice once you watch this enough, it'll move away. If it comes back, Then it sets that first high, moves away, retests that area. The minute it makes the new high, that's the trade where you can play with the market pulse. But you can use this to peel out of some of your trades. So I'm going to do that here. I have a longer term trade on based on the SI event, but I can get out of some and or add to this based on what it does off of this selling. Granted, this is just the 5-minute one. I like the hourly one, and you can see the hourly is not really doing much as far as this is telling me this is the most selling in the last 5 minutes. It's important. It's not as important as the hourly, right? Hourly, this is barely a blip. You can see it was only 26% of the most volume or selling. So what I could do is try to add to this. Again, this is the 5-minute. I don't really want to. Actually, I won't do that because I don't want to trade off the 5-minute. I just like to know what's going on with that. But what this will probably do is come back here, test, and if it's truly bearish, continue to be bearish, it's going, the minute it gets below that last low, you can short it and your stop goes right above where this came in, right? That's just a market pulse short-term scalp trade. All right, we got almost 40 points in this, and I made a huge mistake the other day. I had
S&P Iceberg by ES 722 contracts.
right when I open my mouth, the thing pops. Hold on a second. All right, hold on. I'm just trying to say. I just don't. Someone just swiped it and you hear the market pulse go off. I'm gonna get out of just like I got 7 on. I'm gonna get out of 2 right here. Because I traded double size anyway. All right, so I got out of 2. Hold on a second. Wait, what's the natural gas number? So I had 68. Hold on a second. So I still got 5 on, and I'm okay with getting on a couple here. If I was trading this on my own, I would wait. I got out when I saw these swipes here. I just got out of a couple because I was already thinking about getting out of some here. I just can't. We're going to be on other markets. And I'm a little shell-shocked from the other day. I caught an awesome short in my room. It was on my trading webinar in my room that I do every morning. And it came down. It was at the bottom of a market profile. The bottom of market, that's one of the areas I get out. It was like at 20, the last 2 digits, right? And it got down to 27. And about 1,000 buy ice came in, and I was trying to milk out another 7 points, and the thing turns around and rips 70 points on me, and I actually took a loss on the trade. So it's like, especially in this market environment, you got to judge too based on the market environment. Do you think this is going to keep going, or do you think it's going to? Hopefully this guy's not talking too over me. Or is it going to do the normal bungee jumping? You can see this is already bungee jumping. So I got out of a couple. Other than that, I get out at important areas. So what are my important areas? Well, definitely the lug. So if this gets down to the lug, these are Ludwig levels. Check the sheet. That's here, 2450. I will be watching. I will probably be out of all of them, right? That's going to also looks like it's confluent with a market profile. That's right here. Let's see what this is. Yep. So it's right at the bottom of this as well. This profile, I'm sure, has something to do with that. She doesn't. Obviously, her formula is proprietary, but it's absolutely ridiculous. It's the second strongest thing I've ever seen in trading. Are the Ludwig levels. Anyway, let's see what happens here. I got out of a couple. I'm not going to be surprised if this does that because that's what it always does for the last 6 months. So that's why I wanted to get out of a couple there because as I'm showing you guys this stuff, I may be missing areas to get out and I don't want to. But you can see I don't want to hold this and watch this come all the way back. What that bounced off of, I actually should have got out of a little more if I was looking at this. This is an area that I get out. Point of control of this market profile composite. Point of control is just where the most trade occurred in that composite. And you can see it is meaningful. It says where this launched from on this day. So I should have been out of more than 2 there. I'm glad I got out of a couple. But you can see here, so, I don't just randomly pick places as the market's going, I think I should get out here. Oh, this looks like a good place. I have distinct places where I will cover some if the market can't push through. Again, I missed that point of control. I would have been out of half of them because of especially how the market reacted to it before. But right here, number 5, I pay myself as the money makes money available to me. Ludwig levels is number 1. Market profile composites, highs, lows, points of controls. That's where I just got out of some. I got lucky. That's not why I got out of there. Those 2, but again, I wanted to get out. I should have got out of more. And then these are all the reasons I get out. So I don't sit there and just randomly get out at places. I have these all set. So when I'm position trading, it's more subjective, meaning, the reversion trade here, where we're playing, I was showing you guys that this one already worked. The reversion trade is you're playing for a move back to the volume event. Well, these are all set in stone. Like this is like you're your own algo, right? You're getting in on that last one. You're in at 450. Your stop's at 69.75. You're out at 21. So you're basically playing for that. There's no subjectiveness in this at all. The position trading, that's this part of the spreadsheet, and here are my trading strategies. There's been a couple more added. That's where you have to use more subjectiveness to get out, right? So I'm always out at an opposing volume event. There just hasn't been an opposing volume event, right? So if this were to come down here and a new event comes in and it pops out of here, I get out. So there's an example yesterday. Like I told my room I was short. Yes. This was yesterday afternoon. Right here. Covered that ES short at 34 quarters. So I was short. It was torture, but I was short. And a new volume event came in. And it turned bullish, meaning I got the ATR out of there. I was out, right? So that's where I'll get out of without question. There's no subjectiveness to that, right? The other areas are subjective, but usually the major lugs I'm out. And again, those are the lug levels. So this is why I got out of some. I should have gotten more again if I knew it was point of control. But this is how these markets are acting lately. It's like any down move is met with instant bungee jump. Instant rejection. So now I gotta sit here. But guess what? This is a perfect example, right? How many of you guys were like, oh yeah, I love Scott's short idea. I'm going short.
NQ
and I did that.
By NQ 157 contracts.
So this is perfect too. We're gonna draw this zone and trail my stop on this zone. But the point is, you got your move. This was a 40-point move instantly, 44-point move instantly. How many of you guys trailed your stop? And then you're stopped out. You're thinking you're great now. But what if this does this and then does that? And you're going to miss a 100-point move or whatever it turns out to be, because this is just random areas that this is trading in. Hold on, that's the market post. As you can see, 5 minutes, this is the most buying, and you can see it on here, obviously, but this is the most buying for the last 5 minutes. There you go, you see that? All right, I gotta turn this off. All right, thanks for playing NASDAQ. All right, so anyway, new volume event. I better hurry up and get this in. Did I mention I'm mad that I didn't get out of half my position at the point of control? Guys, trading is just a constant brain mind game. Like, you've got to stay centered. Like the other day, I started to go on tilt. So I had, like I was telling you, I had that short on, and then I tried to squeeze out 7 more points, and I didn't get out of the ice, and then I started going down the rabbit hole. It's so easy to lose your composure, and then you just all of a sudden you start making, and then you have you turn a nice day, a winning day, into a losing day, and all of a sudden now you're in a slump after it just. You got to stay grounded in what's going on and catch yourself. And the most important thing is you're going to have emotions. It's not. I'm just going to make this a different color. I usually save these for double whammies, but we'll make it dark blue. It's not that you ignore your emotion, right? If you ignore your emotion, you're going to end up going postal on someone eventually, right? So it's like you let it out, but you let it out, and then you realize you're not at the best state of mind, right? So do not try to act like things don't bother you. Like this is definitely. I mean, I expect this, but I don't like that the market just ripped back 50 points on me, right? But I expect it, especially in random areas where there's nothing going on. We did get a volume event here, but the point is, like, don't try to hide your emotions. Let it out, move on, and then realize when it's like you're being way too emotional and it's time to take a break. All right. So anyway, what I can do here. So you remember my original stop, and it's in here, was I shorted at 94. Stop was at 5472, way up here, right? Because I was going to force this market to come back all the way through this volume event, this first one, that 1300 buy ice, to stop me out. Well, now I have a new event. Now I can stop out based on this new event, and it's basically right where I entered. So I plug in the new event, 15,395.75 is the top of your zone. And again, this this spreadsheet is an absolute godsend. There's no like questioning. I mean, remember my old webinars, like it was kind of more like, okay, this looks pretty right, and I'm just guessing based on ATR. And now you just plug your zone in, the zones in the ATR, and you know exactly your prices. Again, that'll be available for you guys hopefully next week. It's almost finished. 1390, 15391.25. I think that was. Yes, and then the other very important factor is your ATR. It's up to 28.38. So now, based on this new event, I can move. Say I shorted off this new event. Well, my stop would be 28.50. So I've just saved myself about 50 points of risk here. I may already be there, by the way. Hold on. Pretty close. So this is the only dilemma I'm having here, right? So pretend this zone's not here. I absolutely put my stop goes at 28.50. What's that? It's an ATR plus 10% above this volume event. Then I'd be out, right? And I made a little bit on that on the move down. I'm going to take a loss on that, and then I move on to the next trade. The problem with this exit here, it's in the middle, smack dab in the middle of this prior volume event. I don't want to stop out in volume events because there's a very good chance that this market hits this volume event and then fails. Why? Well, whoever is in this, whoever bought all that ice, you just got to think of them as initiating positions, right? Just think if you're the big house here in the market, you bought, I don't care what they were doing, this was not a great place to buy, right? The market moved down 50 points from there. The point is, just say they're initiating positions, or you're the one, you're at a big firm and they let you put on 1,300 buy ice, and then it literally smokes you for 50 points, and you're holding on, your risk manager's calling you on the phone. This is all from experience, by the way. And you're like, you hang up on them, I got it. And then you're like, you got that pressure, you felt that heat. As the market comes back, what are you doing? You're like, oh, thank God, please let me just scratch out of this. And then you scratch and you start to get out, and that causes the next wave down, right? So my point is, I do not want to stop out in the middle of this zone. So I have to use a little subjectiveness here. I'm going to move this. It's going to be close to 20 points outside of here. I'm okay with that. If I end up losing on it, then I cost myself an extra 20 points, but I'm not stepping out in the middle of 1,300 buy ice. A broken ice setup. It's not happening. You can see the market already bounced off of there. So I'm going to move this stop 20 points out of here. I'm going to find a way to turn that winner into a loser, like I talked about. I'd be fine with this if I just would have seen that, because I expect these markets to do what's doing. If I would have just seen this point of control, I would have been out of half, like I said. So that's the only thing that sucks about this. Everything else, that was a mistake on my part. Everything else is just normal market movement, right? All right, so I'm going to move this to 45. This is my stop here. If that moves up up there, then I take a small loss. It's not, because I did get out of a couple, but so there you go. In the meantime, this volume event looks like it's a bullish volume event, most recent volume event. So let's check that out. So that was 24 quarter. So once I plug these zones in, it tells me validation price, meaning the market was able to get an ATR 24.25, and that's how I determine whether these are bullish or bearish events. That obviously got to 24.25. So this actually is a bullish event. You could trade this based on the ATR. If it retests fails, I usually would. That's a barf trade. What I'm doing it was for the month of July, but I'm continuing because it's been very effective. I'm not fading. Actually, this may be an okay trade now that I look at it. I'm not fading algo, guys. So this is the exponential moving average. You can see it's starting to pull the blue. This is the blue exponential moving average. That's the short term across the red. Many times, when you get a cross, you get algos that start to trade the cross, and then it flips. But the point is, I'm not, say this was blue was below the red, I wouldn't be taking the barf trade long if the algo guy is disagreeing with it. This is fine now. You can see it's pulling across, so it's not bearish right now. So meaning I got that volume event, it comes back, retest fails, I could go long. So I will stop out of the short and then go long. So let's see what happens here. But this just helps me because I was going back through my trades and I kept noticing almost all my barfs that were losers and lick trades, they all were going against algo guys. So it's just a filter. You don't want to have too many filters because then you're frozen over your, this says short, this says long. I don't know what to do here. Well, I'm trying to find this. I post this guy for you every week. Where's it at? resources. Hold on here. This is worth the wait because this explains it all. Put it in the YouTube room as well. You can come up with 10 different strategies just with this thing, with the volume events, obviously. Dingo Boss says, good morning. Is there any way we can download the cheat sheet you showed earlier? You're talking about my spreadsheet? No, that's part of my trade room proprietary. My trade account, my trade room, you get the spreadsheet. I'm going to have it available hopefully next week. Subscription based thing though. But yeah, this thing's worth its weight in gold, right? I mean, whatever subscription price I make this, it's not enough. But I'm not gonna ring you guys up for this. But this thing is awesome. Why it's incredible too is you put in your account size and what you want to risk. Then it tells you everything to do, like how many contracts you can put on. Mind you, I'm trading these Apex. I'm risking 10% on trades, so it's a $5,000 Apex account. I'm risking 10%. You should not be risking 10% of your account size on any trade if you're trading your real money. It should be the most 2%, right? So if I was trading this as a live account, you should be risking $100 on your trades, right? If you have a $5,000 account, is what I'm saying. So I'm telling you, if you trade bigger than that, you think you're gonna be fine, and you're gonna have a day, you're gonna blow out your account. It's 100%. I tell you guys this every single week. Respect your risk rules and do not be using 10%. Again, this isn't one of those scenarios where I'm saying do as I say, not as I do. I'm doing this because I'm getting all these Apex accounts live. I showed you, so these are all these here for all my different strategies, right? So like yesterday, I blew out of this one because you got to be careful on the Apex. We'll go over Apex, but so this one was profitable, and I blew out of it because I had a drawdown of 5,000, and I blew that out. But so these are all the different strategies that I'm doing. So the whole goal is to get. It's going to happen. It's just this trade's been horrible, so it's been a slow grind. But I'm trying to get all these live, all these different strategies, right? So I'm doing this for a couple different reasons. One, so I can keep track of the stats for each one of these strategies. Two, because I've learned the hard way trading multiple accounts with my own funds. I on these webinars, you can ask my room. I make so many damn mistakes. It is just killing me. I mean, I can't cost myself tens of thousands of dollars just because I forget to take a damn order out because I'm showing another market and whatever. So yes, when those all go live, those are all going to be real money, but it's not like I'm losing my living expense money. You see what I'm saying? So that's why I'm doing it that way. So all those accounts, one was live for a little bit ago, the Izzy, but I had to draw down and that blew out because I was trading too big. Then there was another example that I was doing exactly what I told you guys not to do. I was trading too big a size. I loaded up on a trade and I got smoked on it. But the point is, that's how I'm doing it. But everyone can see exactly what I'm doing, and I highly recommend you use Apex for your trades. Oh, by the way, do you see why it hasn't really moved lower yet? And like I said, if this does this, then I'm going to go long. But I'm still on my short, and I didn't stop out in the middle of that. I would have been stopped out pretty much to the exact tick, and all you hear me doing is bitching right now. So that's why I put my stops outside the volume event. You can see these algos. They are just playing games with your money. Make them push it through the volume event and an ATR outside there. I mean, not in this instance. We're trading off. We trailed our stop to this one, but I'm not stopping out in the volume event. If they could push it up through there, then fine. You win. On to the next trade. There's only about 5 million more trades in your future, right? Trading is probabilities. If you have an edge, you just keep putting the trade on, and you will make money if you have an edge over the long run if you follow your rules, right? I'm gonna take a little break here. Not the spreadsheet, but the one that had different definitions of trading strategies on it. That's my trade room as well. So if you guys, my trade room is, it's for the amount of information you get out of that thing. I mean, I should increase the price of it, but the point is, just come in the trade room for a month and check it out. If you don't like it, then you don't like it. But that's part of my trade room as well. What I'm doing here is what I do every single day in my trade room. Usually it's twice a day. Lately, there's been very sporadic afternoon webinars because it's like watching paint dry and nothing's going on. So it's just like a lot of traders are are out of town and stuff, so it's like there's no participation, and I'm just not going to talk to myself. So anyway, I was watching this volume event here. This was wheat, mammoth stop run earlier. This was actually a double whammy. You had stop runs. You see 700 stops, which is a ton in wheat. The threshold in wheat's 150. Into the waiting hands of buy ice 277, and you can see the market inherently. The market, that's a bullish event. Inherently, it's not always bullish. We have broken ice or broken double whammies, and that tells you something if that happens. But most time, inherently, it's a good fade setup. Why? Stop runs are not initiative selling. It's just guys puking, retail traders puking most of the time, and then you got the big money absorbing it. Well, that inherently should do that. That's exactly what happened there. So let's see if I missed a trade here because I was focusing on the whipsaw NASDAQ. Bigger picture. I'm sure this was probably an Izzy. It sure was. So I should already be long this setup. I might get lucky and able. There's your inflection zone. Very important zone. Gapped up. That's directional conviction. And that's the balance area. You can see tested here, buying tail, instant rejection. Here we are again, volume event. I should have already been long this aggressively. Let's hurry up and get the zone in, and maybe I can get in it. Please stop running away from me. Top of the zone's 31 quarter, bottom of the zone's 20. I should already put this in. Hold on a second. I was eyeballing this. It was right before the webinar. This is what I'm talking about, guys. I miss so many trades and make mistakes. It's like I just got so much going on, especially with the webinars or the ATR, where I'm one guy, right? I make mistakes. So I should have been long at 34. It's 1.29. You could trade the micro ZW. It's very thin. You're going to get slippage. I'm just going to round up in the regular contract to 2. Let's see if I get lucky here. Please be around 34. All right, it's there right now. All right, so I'm going to get long Izzy, wheat. Hold on, wheat. See, right when
Iceberg by ZB, 611 contracts.
Right when I say it, start swiping up. This is my life story. Like literally, there's a microphone in my office. They hear me saying, "Don't run away." Come on, I'm gonna pay up 2 ticks. I put it at 34.50 because I don't want to miss. I already missed the original entry. So what's this trade? I just filled on that. So Izzy's are aggressive entries, meaning I get in the minute they break out an ATR. I don't wait for the ATR retest failure. That's what I do on the BARF and the lick, and I think I could put on those too if it were to retest the zone and fail. It hasn't retested it yet, but see if there's any liquidity up here. There is a little bit, so I could put that. Yes, there's liquidity below 2. That's not a disqualifier for my trades. Yes, you guys see me every single webinar say these are magnets, right? The odds of the sparker going and tagging this are very, very high. Doesn't mean it's going to happen right now. This thing can go 20 points and then come back and tag it. So that's why I don't disqualify my trades with it. You can use this as one of your disqualifiers, right? Like I don't go long if I see major liquidity right below the area. Then that's not a bad idea. But I just don't, because again, you never know how far this market's going to go before it comes back and tags it. So this is an Izzy zone. I got my volume event. That strategy, you can see it does not say on here, take fade trades with moves in the prior inflection zones. And we can talk about these exceptions in a little bit, but the point is that you don't see unless there's liquidity below or above. You see what I'm saying? So these are my rules. I put on the trade, right, and play the probabilities. That's what trading is. Do I need to get into my trading rant? Am I trading in the zone rant? Let's see. Let's just do it since nothing's going on and I'm being tortured by NASDAQ. Here's your retest of the zone. Quickly before I go into the rant. What was this? Oh, was that the perfect 1 ATR trade? Yeah, it sure was. Hope my room's taking these trades today because they're working like a charm. Right here, go to the reversion. It's part of the spreadsheet. You short at 21 quarter, stops at 55, you're out at 98.50. Where did that go? You took about 5 points of heat. Just nothing, nowhere near the stop out. And some of the best reversion trades are in the prior volume events. And here's your retest. You're out. There you go. Quick 30 points, whatever that was. For position trading wise, now this is the ATR retest. Now if this moves back out of here, I can go long. remember, it's going to be the same price as where I need to get out of my short. I'm not going long in the middle of the zone. I'll go long once it breaks above, just like I place my stop there. Hold on a second here. Right, so that comes back. I will go long. The barf setup. And let's see, any liquidity up here? Yeah, I mean, that's, you want to be careful, like spreading it out, like trying to find liquidity, but that's been in here for a while. That's good enough. I will take the lick trade as well. So, just make sure this is up to date. Stay on top of your ATR. Still 28 point, it's pretty much the same. So I can go long the barf and the lick setup at 28.50. And that's where I was going to stop out of my short, right? Same price. See the difference? See over here? Stop price, entry price, same thing. And this isn't a beautiful thing in its own right, where you're never going to have, like on Apex, you can't have two different accounts trading NASDAQ, one long, one short, for obvious reasons. Guys are, one loses, they get out of one, and the other one rips, or whatever. They've got a bunch of different reasons why they do it. But regardless, I will be out of my short. I'll stop out of my short, and I'll be long. My different strategies, but the point is, it was supposed to be 28.50. Actually, I don't even think I would have gotten stopped out there, or it might have been to the tick. Let's see. Did that ever touch 28.50? Yeah, it did. It literally almost to the tick. I would be losing my mind right now, guys. This is why I get the stops out of the zone. So now if this comes back, I'm still short. If this keeps going, I would really appreciate it. But if it doesn't, I'm going to stop out of my short. Remember, I moved it up from here, just outside of that zone. And then I'm going to go long barf, and I'm going to go long lick. And I'm going to put them in the same spot, 45. Let's get that. I want to see what the bigger term market pulse is doing too. So here's a great example too, right? Shorter term, this is the 5 minute. I'm not trading, I don't do the scalp trades off the 5 minute, but I do here, and this is just for example, so that I'm messing around on this Apex account on my other computer with market pulse. Look how well it's done, right? So this started at 150, it's up $6,700, just me screwing around with market pulse. That's all I'm trading on that one. So you can see the potential in that. What was I just going to show you? Oh yeah, so you can see guys, look at this pattern. It's the same pattern almost every time. It's ridiculous. It's just like the volume events. Here you go. Stream buy, right there. Buyer's offside. What does it do? Retest. Why did this happen? Because these buyers probably said, oh shit, I'm in big trouble, pardon my language, I need to get out of this trade. Right? It's over and over. So how do you trade that? Again, this is the 5 minute. I'm not trading the 5 minute when I'm scalping. I'm doing the hourly trading period. You do this, there's your low, you retest. Once it fails, you get short once it crosses that first low, and your stop goes above that high. It's a quick scalp trade. That's 15 points you're risking, and you already got like 20 plus points, right? It's a beautiful thing. Guys, this is what drives markets. This is it. Volume events. This is still volume event, right? I mean, this Bookmap is laying out why these markets do what they do. And if you know how to read it, there's your edge, and you can compete with the Christmas trees, the algos, right? What a beautiful thing. Think about it. Like, most traders get in here, they're staring at a bar chart, they have no idea why this is doing what it's doing. When you know this stuff, you are at an advantage. You are at an advantage over 99% of the trading population that don't use this, that doesn't use this information, right? It's just, I can't stress it enough. This is it. If you're not using this, you just don't have, I don't care how good of a trader you are. I say it every webinar, you can be a 10 times better trader with this information at important areas that you're already using. Why would you not want to know 1,300 buy ice came in and is wrong? Why would you not want to know that the buyers were extremely aggressive up here immediately offsides? Yeah, you can see it in the bubbles, but you can't look the relativeness of the bubbles. That's the bubbles look the same here versus here. They're a little bigger. I can't tell whether this was excessive buying. There's nothing here than this was. That's important information. Why do you want to be long if you see the buyers trying to push it up and they're wrong? See what I'm saying? So again, this is the 5. I'm using the 30 or the hourly one, but I just want to show you that it's unbelievable. And guess what? When you do see this spike, you're going to see it eventually. The hourly. Actually, let's turn the hourly on so we hear if I'm not on the screen. That's telling you something, right? And you can make some judgment calls. All right. So here's your Here's your retest. There's the failure. You guys, it's the same patterns over and over and over. Here's your ATR. Here's your retest. There's your bounce. If that comes back up, I'm going long, barf and lick, and I'll be stopped out of the remainder of my Izzy short from the beginning of the webinar. All right, I gotta take a breath here. So what did I say? 28.50, but I moved it up to 45, so I'm moving it up 17 points out of that zone. So let me put these in. Size, I can trade 4. I'm not going to trade double size to the upside because I don't have a a bullish thesis. I'm only taking shorts to the downside. Double, not longs. All right, let's put this back up here. So that is the barf.
Bondi Iceberg sells EB. 500 to contract.
I forgot about bonds. I didn't want to go over there. I'm going to go over there, and then you guys are really going to hear me complain. I posted it in my room, and I completely forgot about it. There was tons of ice at the beginning of the day. Hold on, I'm trying to put these orders in. 60. All right, those are. Wait, why am I on? I thought I had Izzy on. Oh, that is Izzy. No, shockingly, I traded the wrong account there. Let me see something here. Did I can't remember what I did here. I know I had Izzy short on. Did I have the barf too? Because I definitely have the position on, of course, as I see the thing ripping against me.
Bondi Iceberg sells EB. 534 contract.
Yeah, I had barf and Izzy on short, so I'll flip out of barf short and go long. If it gets up there. Then I can put on the lick trade as well. We already saw the liquidity above there. And that is number 66. All right.
US sells $60 billion in 6-month bills on August 7th, assessed on August 10th, and the US will sell 67.
Struggling. Hold on. All right, got him in there. All right, so I'm getting off this market right now, but the point is, I was short. I forgot I had both shorts on. I had Izzy on based on this, and then I took the barf as well. I got out of a couple down at that point of control, even though I didn't know it was point of control. It was just because those swipes. And then we got this new event. I trailed my stop. It was above this, way above here. I moved it here, and I put it there. And now this volume event was bullish, so I will stop out of my barf and lick. My barf and Izzy, and I will go long barf and the lick trade. All right, I've covered that like 10 times, but I need to keep telling myself because I keep forgetting what I'm doing here. When I go to other markets, I blank out. All right, you guys ever seen this pattern before? Here you go. ATR, retest, failure. I'm already long the lick, but now I can, the Izzy trade that we talked about, but now I'll go long barf too if it comes back. And then I gotta go over to bonds. That's gonna be painful because I'm sure that trade was a whopper that I missed. Let's see here. CW. Just want to make sure this ATR is accurate still. 2.30. All right, that comes back. I can go long. Same price, 34. I could put on to barf and lick because remember there's liquidity above here too. I know there's liquidity, but we already covered that, so I'll take that. And here comes the torture treatment with the tick strike. Now I get to watch my position go against me and listen to it. That's always a treat. I absolutely have to have that and market pulse, but it drives you crazy. There's nothing worse than watching and listening. Hold on, I got to put in these weak trades. 50. What was that price again? 34. Yeah, 34. Why is this? Oh my gosh. Hold on, guys. Alright, that's good enough. Alright, those are working too. Alright, so now over to bonds. This one's going to hurt. I have a feeling. specifically told my room. There you go. It's coming back, but this was, boy. So this was a barf trade, literally. Just told my room. Right here. Lots of ice activity in ZB. Oh wait, I'm still short nat. Goodness gracious, hold on. I was short natural gas too. You guys, you see why I'm using Apex accounts? Because I'm an idiot sometimes, most times. Well, this was looking good. Let's see where it's at now. Hey, what do you know? I think I stepped out of that. Something happened in here. Oh, you know why? See, this is exact, guys. I am such a good example of how easily, like, mistake. So what do you think this was here? So I probably shouldn't have had the short on into what? Oh, the natural gas number. Yeah, that was that. Yeah, so I just took a loss in there for absolutely no reason. I would have been out before the number. Completely forgot I even had that damn position on. There you go. So now I'm starting to go down the rabbit hole of mistakes, mental, and then I start to get mad. So this was a barf trade. You got your ATR, your retest, your failure. I could have gone short here, and then I would have trailed my stop. But this one's not as bad because I'm going to draw this newest ice event, but I would have been out the minute I got an ATR above there. So this would have been pretty much a scratch trade. This is how I trail my stops. My stop would have been up here. I would have been short. It hits buy ice right there. I trail my stop to the new event and came up and stopped me out, kind of just like the ES trade I showed you from yesterday. Right? So that's why I trail my stops, based on something that happened in the market, not because I'm trying to save money or scratch or whatever reasons you guys are trailing your stops in the middle of nowhere, random areas. So this zone is that natural gas. That hurt a little bit because that was a decent trade. Yeah, and I lost double the size. So look at this. This guys. This is why I'm using the Apex accounts. Look at this. So my risk is 500. So I lost double my risk. Why? Because I didn't cancel my order and I had slippage there because of this swipe that happened at the number. So my stop was an ATR above this volume event, right? I got short here. This was an Izzy trade, and I put my stop there. And guess what? Guess where I got filled? All the way up here, because somebody came in and swiped these stops. So you get whoever's swiping this, you get, then the stops came in, and I was part of those, obviously. But the point is, you don't get filled down here, you get filled up here. So I just lost double the size. Not only did I take a loss on the trade, I lost double the size, all because I forgot I had the damn trade on. So there you go. That's special. All right, you guys got questions? Fire 'em in.
Bondi Iceberg by ZB, 511 contracts.
I always say it's painful to have these mistakes, but at least you guys get to learn from my mistakes, right? That's the whole point of me, my teaching you guys stuff is you don't have to go through 25 years of mistakes, and for some reason I keep making them. You can be like, okay, hey, I gotta pay attention and not have my orders. I might want to know my positions, but the thing is, it's so hard to do these webinars and remember everything I got on and that I deleted my orders, so on and so forth. So, all right, I'm over it. Move on. That sucks. All right, so you heard more bond ice as well. So let's see what's going on here. That was a little higher. Let's see. And yeah, that was threshold. There's another thing too. If you're seeing huge ice over and over and over, way over threshold, don't be drawing zones for threshold. Like this iceberg here was 2,500. That is a ton, right? So I'm not even going to draw the 500 because there's 700 here, there's 500 here. And the other thing too is if you see your threshold hit 10 times in the first hour, well, you don't want to be using 500 anymore for that day. It's just like volatility, right? You got to increase it. So I would be using it probably at least 1,000 today because in the morning this was 1,000. There was more than 1,000 over here, right? You see what I'm saying? Let me turn this off here. like you had over here, 1100, 800, 800, 600. See what I'm saying? Don't be using 500 of bonds today. You got up your size. I'm only going to draw 1,000 or more. And this one was definitely tradable. So now this is definitely an ATR. I haven't even put this zone in yet, but if this comes back retest failure, I'm going to go long, potentially, if it's not against Algo Guy. Let's just plug this in real quick. And guys, you know, I tell my room this every day too. People are like, I'll get like direct messages or emails. You know, I don't want to, I'm not trading soybeans. I'm not trading bonds. It doesn't matter the market. Learn what I'm doing, and it's applicable to any market that you're trading based on the volume events, right? As long as you know the thresholds. It doesn't matter. The patterns, I'm showing you the patterns, and like I think last week we looked at the patterns in 8 different markets. It was all the same. It doesn't matter what market you're trading, as long as you know what's a significant amount of volume to be trading in the area. All right, that is a really tiny ATR. Anyway, so that the validation price to make that along is 0.10. It got there. So if this goes retest failure, I could go long, but I can't go long because I'm fighting Algo Guy. Remember, my BARF trades are not trading against Algo Guy. What I could do here, though, what I could have done, and I missed a trade, it looks like. I think this was an Izzy trade. And there you go. Inflection zones is pretend like this is something you look at. MACD or Bollinger Band or whatever you guys are looking at, right? You get 2,500 buy ice in an area that you already were thinking about buying as a support area, and then you get confirmation of 2,500 buy ice. How good of a trade is that, right? That's the edge. So I missed this trade as well. I'll put it in. Hopefully it comes back for me. So I should have been long at 10. I could put on 3 bonds, risking $500. So I completely missed. This trade is already like 9-10 ticks in my favor, and I missed it. So now you've already seen I made the mistake in natural gas. That cost me double, actually $900, because I would never even been in before the number because I forgot to delete it. And then I missed this trade to go long. It's very sad. All right, that's working. All right, throw in your questions. I feel like I've been on this webinar for 3 hours, by the way. As I start making mistakes, I start to go down that rabbit hole. All right. We love you, Scott. Thank you. Thanks for being so candid. Guys, what you see is what you get with me. I mean, I'm a human being. I've been trading for close to 25 years. I still cry, whine, get mad. You know, again, I'm just human, right? I mean, the one good thing that I've learned over all these years is I do catch myself when I'm doing it. So I can, a lot of times, you know, I don't go on tilt and just start doing stupid crap, throwing in orders like most traders do, you know, trying to get it back, saying, you know, screw it, I'm already down $5,000. What the hell's another $5,000? That kind of thought process, which happens to everybody at some point. I do catch myself, but, you know, and I know it's annoying to listen to, but, you know, in here and my trade room, but what you see is what you get, right? I'm a real person. It's not some, you know, me standing in front of a Lamborghini saying every trade I put on is a winning trade. See what I'm saying? Because anyone who does that, you might want to run the other way. All right, so there's really nothing going on. Let's go back to sweet natural gas that I screwed up on. This is definitely a volume event. This was the number, but this was looks like a pretty major stop run here. This looks like a double whammy, actually. 290 buy stops, not quite threshold. Oh, what did I fill in? Oh, I just stopped out of all right, so I stopped out of that short. That was the other mistake I made. I should have been on half my shorts down at the point of control. That's done. I'm now long. I got out of my shorts. This volume event was bullish. I just got long, of course, to the tick. I did this for a reason. I got it out of the zone. I'm hoping this doesn't fill me to the tick, because there's another. You see how, like, when things start going bad, that it just seems like everything starts to go bad, right? So I just literally, I think I filled to the tick, which is, you know, fine if it keeps going, but if that's the high price, I'm gonna cry even a little more. No, it wasn't the exact tick. All right, so we're long. And you got to remember, bigger picture stuff. Yes, this ice was wrong initially, and we made a little profit on the first part of the order.
500 free contracts.
But someone came in here and bought 1,300, so that's still in play. I mean, these sellers didn't get much out of that, and it was pretty instant rejection. So thesis-wise, you're like, okay, there was a bunch of buy ice here, and then you had this come in, more buy ice, and that reacted like it should. So I'm long now. I don't like long. Like my thesis is not long, but this is what these markets do every single time. Every time you think they're going to zero, they bungee jump every single time. So, this is a pretty big down move from yesterday. And here we are. The issue here is I went long here, and I got to contend with this zone. So we'll see how this reacts in here. But I'm gonna, if this starts to struggle up in this zone at some other areas we'll look at, then I'm gonna be piecing out. I have 5 on. So I'll piece out at some important areas. Let's take a look. What's the thesis I'm getting here now? I already did that. Hold on. Come on. Market tried multiple times to get in this most recent one, and this is where I made the mistake. I don't know if I showed you guys that, where I didn't get out of more. Anyway, tried out of that. And then it couldn't stay in this one either. Both of those tell me at least a short-term, bullish thesis. I could trade bigger size. I'm not going to trade bigger size into that inflection zone, but this is looking like this is probably going to come all the way back to this. And I'm long, but I'm just not long double size. This is where it looks like we're going. It's going. And I will watch that very closely. That's step 1, and then let's look where we are in the lugs. There you go. That's the. I got to contend with the yellow lug here too, right? So it struggled here last time. I'm hoping we can push through. If it pushes through, well then, my ultimate target is red lug up there. And again, these are. This is this. Go to her website. You can join your 3-day trial and check them out. Once you go back, you'll never, or once you try them, you'll never go back, whatever the phrase is. So you can do a 3-day free trial, say something on Bookmap webinar, special pricing. Again, they're incredible support and resistance targets, coming up with a thesis based on when it draws new lugs, what's going on. So the thesis here is this had multiple opportunities to tag the blue, and it could not do it. Tried it, no. Tried it, no. Tried it, no. And it keeps, like this got down like 2.5 standard deviation. This one was the same, or 2. This one was 2. Now it looks like that. If this can get above yellow, that's looking like that. And then that's pretty close. That's the bottom of that, but it's a little higher. It's up near the point of control. That's the same area. So I will get out of some as this, if this can get through. I'm not getting out right here because I just got in. Normally, so say I got long down here, I would get out of a couple at yellow lug, and that's confluent with daily value area, which is 1 standard deviation of VWAP. But I just got in right here, so I'm just hoping it can push through. I'm hoping these guys can, and that's what they're doing, the usual bungee jump. If it can push through, then I'm liking where we're going, and I would look at 520 to get out of probably half, and then I would hold half to see if we can get up to 580. I wouldn't get out of point of control from a single day. That is 480. You could if you want. That's not one of my major areas. So I'll hopefully it can push through. But you can see here, I may get out of maybe 1, maybe a quarter there because of what? Well, that is point of control. That's 2.5 standard deviation. So you could get out of. I'll probably get out of 1 there, right? And then I'll hold 1, see if we can get up to 520, or hold the rest. I'll get out of half or whatever I have left there, and I'll try to get to the red lug. And then everything else, if I get a bearish event, then I'm out of everything, kind of like I've entered. So that's what I'm doing with that. There's not been one setup in ES today, which is kind of strange. Let's take a peek. Maybe we can find some market pulse examples for you guys here. This is the hourly. Here you go. You want to pay attention when they're just stop runs, because obviously it's going to spike as buying. I like when it's like this. You can see this buying was not stopped when somebody came in here, and you can see it on the sweeps indicator. So this is the stuff you get with Global Plus. You guys want to get Global Plus. I always get questions, so I get the regular one and Global Plus. You want Global Plus. So the sweep indicator is powerful in its own right. I'll cover it in my new course. It helps you draw your zones. But anyway, someone came in here and swept 2,000. That's that buying.
S&P Icebergs
Hey.
sell ES 708 contracts.
There you go. So this one, it did the pattern right here. Again, I don't have any set amount like I do with ATR with the volume events. That was the top of that. That moved away. That retested. Once it makes the next high, you can go along there. Stops down here. This is Market Pulse. I'm sure this is brand new. We'll have a course on this, but there you go. So you got in here basically 18 quarter-ish. You're risking about 3 points, 3.25 points, and you already got. Look at that, right? And you're sitting pretty. Now you see the buy. Now here you go. This is where you would probably get out. Now watch this. See, this is what triggered this sell ice. Look at this. But first of all, there's 3,000 sell ice or 2,000 sell ice. But let's see how these buyers do.
Crude Icebergs sell CO
Doing pretty well.
195
So I was watching for it was instant rejection. If it would have done this, then you can take your market pulse short and risk up there. But this got right back above. So actually now you can go like this and take the long. Again, I'll have a course on this, but I talk about this in my trade room all the time. I actually have distinct videos I've done with a few markets already just to show my room. Right here. Another incredible thing in my trade room. Crude, wheat, ES, GC. There'll be more, but it's eventually going to be a course. So anyway, this is the next best thing that I've seen. That's incredible. Like I keep telling you guys, like having Bookmap is like working for a trading firm. I used to work for Wolverine Trading. They're still a very huge. They're huge. They're a huge algo type of trading firm. The developers used to come over to me. So I was trying to reinvent my style, and they'd say, "Hey, we got this new indicator, new thing. You want to check it out? You want us to put it on your computer?" Well, it's the same with Bookmap. They come out with these new things. You're like, "All right, I'll throw this on and see if I see anything." And that's one of my gifts is seeing patterns and things like that. Obviously, right? So having Bookmap is like having your own personal trading firm. It really is with your own developers. All right, so there's your volume event. First one of the day in ES. Let's get the zone in there and see how we're going to trade it. 25. I have it up a little high. It's 25.50, 425.50 to 445.23. We want to talk about the spot gamma levels too. So you can see this thing's rolling. We're long. Nasdaq. Pardon my language. I probably don't want to call it names though when I have a position on, but it's usually giving me the finger. 45.25 and a half to 45.23. Oops. What am I doing? 45.25 half. There you go. 45.23. ATR in here is 4.87. That's actually not bad. I thought it was going to be like 2. What's your address? 2 Briar. Movie? Someone's got to know the movie. I haven't used a movie quote in a long time. Nobody knows 2 Briar. It's really sad. Caddyshack. All right, so let's see where we're at. So this is not an Izzy. Actually, I need to draw a zone here. I just missed this morning. I didn't. When I'm drawing on pre-market, I got to look where we're at. This should be a zone. This is actually heading into a zone right now. So let's just draw this right now. Where do I draw my zones? The 4 important areas of charting: tops and bottoms and balance areas, high volume nodes and balance areas. I don't draw the high volume nodes, but many times there's something else there. Buying tails and selling tails. Like I've already erased these, but this was one at the time. So tails are instant rejection, very important. And then directional conviction. Like this was directional conviction here. Buying tail, gap down, directional conviction. This sounds really important, and it just happens to be the bottom of this balance area. See how that they had like kind of meld into one another. Anyway, this was a gap down from here and a buying tail from yesterday. So I would have an inflection zone. It's not crazy important, but it is, this was the direction of conviction that started yesterday. I mean, that tail was pretty instant rejection. So the way I will do this, the sweet Thinkorswim drawing tools, being sarcastic. I guess they're better than the Bookmap drawing tools. Maybe one of these years I'll have those fixed. See, you can either do this is subjective sometimes too, or you can incorporate this whole tail. A lot of times when you look back, you'll say, okay, hell yeah, there was a bunch of stuff over here. There wasn't really much over here. I'll just keep it like this for now. I just want to know where that area, where this gap down from. So I will take a short into this area. Kind of like this is where we took the short in the NASDAQ earlier. That did work, and that, for a little bit until it decided to do its usual bungee jump. What did I do with that chart? Oh, goodness. Yeah, I watch a few markets, as you can see, and you wonder why I make mistakes. There it is. So it did initially work, and then I had a chance to get out of half, and I blew it, like I've said about 20 times on this webinar. But that was that. It was already part of the zone, but this was a gap down. It came back. We got the volume event. It did move down lower, and now it's back here again. So I am long NASDAQ. Where are we at here? So I got 20 plus points in it. What did I say? Oh, I said 80. So I'm probably going to get out of one. I've got 5 on. I'll get a 1 at 80. I just missed it right there. This is exactly why I wanted to get out 1 at 80. What was 80? It was extreme standard deviation and yesterday's point of control. And wow, look at that. I can't believe those algos kicked in right there. I wonder why I get out of these areas right there. 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 So I'm just going to get out of 1 here. I already missed my actual... I can't believe I made a mistake, though. It's really surprising. Being sarcastic. Alright, cost myself 16 ticks there. But that was a 40, what were we getting long, 45? That was a 35-point winner. And I could have got out of 1 of there, and I messed that up as well. This is why, on these webinars, it's just tough for me to keep an eye on stuff. Alright, so that's the first area I get out. Another area you could get out, which I didn't see when we were talking about the other areas. What did we say? 5 of, what did I say again? What did I say? I think 520 and 580. Well, this is close enough. Why won't this thing stay? Why won't you stay tick strike? There you go. You got a spot gamma level up here too. So remember I said I get out of half at 520? Well, anywhere in here, and you got this liquidity. So anywhere in here, if it starts to fail, I'll get out of a couple, or half of them, and then I'm trying for the red leg on the other half. So that's ready and waiting. Back to ES. We spent a lot of time on NASDAQ today. All right, so to make this a bullish setup, we need to see 30 quarter. Not there yet. Then what could I do? Well, see where algo guy is, see if the bar trade's usually always in play. This is about to pull across, so I could potentially, like right now it's neutral, it's close to neutral. You want blue either in it or above it, and then I could take barf longs, ATR retest fail off the volume event, like I did with the NASDAQ. Same trade I took with NASDAQ, right? This thing was crossing at the time, and then look at it now. See how bullish it is? Right? You got the blue, the short term over the long term. There's just algos that play that game. They play the cross, they play pullbacks into the red. I can tell you guys all the time, the guy I learned this from was the guy I was mentoring for Bookmap because he had a system, he made millions of dollars off of this thing, and he would play pullbacks to the red. Just watch the video. There's so many different strategies there, but he would wait, pull back to the red. If it would fail, get back blue. He would go short, and he put his stop above the red. Well, that wasn't good enough for him. He wanted to, so you can imagine trading that strategy with volume events, which are the most important thing. See what I'm saying? So if you get a volume event, then you can, once it fails, then you're like, okay, I put it above the volume event. Things like that. Opportunities are endless with algo guy, but it's a good thing to keep an eye on because they're 85% of the market are algos. I'm not saying they're all using that exact thing, but It's pretty prevalent in all these markets. Let's see if you guys have any questions. I missed the beginning. Any thoughts on the broader markets? Don't trades from here anything today. Maybe chicken, maybe not losing either. Well, what does maybe chicken mean? If you get your setup, you take the trade. I'm chicken all the time. I put on trades all the time that I say feel terrible if they fit my parameters of my. This is one of the biggest faults of traders, where they won't pull the trigger. I've already talked about this. Like there was a trade, I've forgotten what, and I'm just like, this feels terrible. If I get my volume or my rules trigger, I'm in the trade. That's the probability. You don't know which ones are going to be right, which ones are going to be wrong. So what does chicken mean? So when you're not chicken, you know what's going to happen? Think about it, right? If you know what's going to happen, why don't you bet your house on the trade then? The point is you don't know what's going to happen ever. So you just play probabilities. As you've got to get this through your head. I cannot tell you, or when you think something's going to happen, oh, this thing has to go up. It doesn't have to do anything. You don't know what's really going to happen. That's why you have rules. That's why you have your risk parameters where you get out when you're wrong. But you don't avoid trades because you think something's going to happen. Just flip it around. When you start to think that way, say, well, if I know what's going to happen, then I'm going to bet my house on this trade, right? You don't know what's going to happen. You take every trade if it fits your trading rules. The second most important thing, besides trailing stops for traders, is to stop doing that. I'm glad you put that in. Maybe chicken. There's no such thing. If your rules are hit, you put the trade on. So you got a little rant out of me. Hope you're happy there, Space Cowboy. All right, so see what happens here. Let's see where we are in the lugs and everything else, and then getting close to. I gotta get off the webinar. There's a new guy coming on, whoever the Tom B dude. A lot of good rules today. A lot of good examples and mistakes, and it's a good. A lot of times I'm not putting on a ton of trades, but you guys should still be learning what I'm doing. All right, so this is pretty much in the middle of nowhere. I mean, this is daily value area high, which is one standard deviation of VWAP. It's close to baby lug. This is moving. You can see the delta is moving with the market. That's usually, bullish. I'm not bullish. I don't really have an opinion right here, and I fully expect. I don't know that this is going to bungee jump at least back to where we gapped down today, right? So if I end up getting long off this, actually this was an Izzy, right? Oh no, Izzy's are when they come back. So if this were to come back, actually I could take an Izzy if it comes back, retest fails. Right, because the volume event happened. Let's see. This is a different variation of Izzy. Let's see, 24 was the top of that zone. Let's take a peek. Yeah. So most Izzies are fade trades. I mean, all Izzies are fade trades, but this was the Izzy, the inflection zone that I have drawn. Basically, say it's right there. Well, here's the volume event. So if it does this, if it comes back, that's actually coming back into the inflection zone and comes back out. I can go long. This is just a little bit of a variation. Most Izzies are something like this, right? Where these are the Izzies that I look for, but this is definitely an Izzy if it pulls back, retests. After, I want to see an ATR, like all my trades that I wait for the retest. But like these are Izzies, right? So this is gold. How did this Izzy work? This Thinkorswim's going to drive me literally to the loony bin. These are the best Izzies. Huge directional conviction right into the zone. How did that one work out? Pretty good, right? And here's another one. Directional conviction right in the zone. That did take a bounce, and then it took another bounce. But the first one was a good trade. That's like 100 ticks. And then this one's like 200. And I think there was a volume event here. I missed this trade too. Let's just find one more thing to bitch about before I hop off the webinar. I'm sure there was some kind of stop run down in that zone. Let's take a look. Turn off Mr. Market Pulse for now. No, nothing threshold. This is actually really weird. Gold is the king of stop runs. It's just a stop run every 5 minutes. So I wouldn't add a trade on there, but that was an important area. It still is. All right. Appreciate the force for reminding. Many thanks. No problem. That's guys. I don't want to know the percentage of traders that are doing the same thing. 1, trailing their stops in the middle of nowhere, meaningless places. 2, afraid to put a trade on because it doesn't feel right. That's why you need playbooks. That's why you need trading strategies. That's what I'm trying to show in my room. Look, when you come in my room, you don't have to do these exact things. You can say, "Oh, I like that idea. I'm going to apply some of my parameters to that." Right? You can copy these exactly, or you can make variations of these, or make your own. But you just have to have rules. I already have my volume rules, how I trade them with the ATR, and then these are the exact rules for these individual events, right? So you have to, if you don't have those and you're just trading by the seat of your pants, you've got zero chance. I'm just telling you right now, stop wasting your time. PayPal me and the rest of the room, the rest of the people on the webinar your money, because you're going to lose it anyway. You might as well give it to a good cause. Give it to us. Come up with trading rules and follow them, and stop trading because you're afraid, or not trading because you're afraid, so on and so forth. All right, so a little of everything today. A lot of mistakes. Had a winning trade. Had some losers because of mistakes. Actually, how's my wheat trade doing, by the way? And then you got some rants out of me, so that's a good day for you guys. I don't even think I put my stop. Did I not put my stop on this trade? I got lucky if I didn't. I should have been stopped out of this. I don't think I put my stop in. Stop should have been 26 quarter. I think I would have avoided it. Or stopped out to the exact tick. No, I never traded 26 quarter. So that's good. And it's back. But I got to put that stop in. Remember, I was long. I got long the Izzy trade. Let's quickly take a peek. Because this is why I put my stops outside ATR outside of the volume event, so I don't get stopped out. And this looks like it probably will stop me out, but that's fine. Then you're on to your next trade. It's probabilities. Every trade's not going to be a winner, ever. I know I have an edge. I don't, bat an eyelash. I take my loss, on to the next trade. Take my loss, on to the next trade. Winner, winner, winner. Take my loss, on to the next trade. Probabilities. I did not go on to the trading in the zone document today. That's part of my trade room too. Come in there. You can hear me rant about that every day. Trading is probabilities. Why can't I find this wheat chart so I can show you that zone one more time? Still struggling. It's here somewhere. No, that's Algo guy. It's way up here. No. There it is. Hey, there it is right on that screen. So I took that off of that. Volume event was in this. It just right now we'll try to get a little bit lower and just put it in the buying tail. So hopefully it doesn't come back. If it comes back, then I'm stopped out. If not, I'm playing for that. And I'm going to watch this zone closely. This was the bottom of this balance and where this market started, this directional conviction. All right, guys. Hopefully you learned a lot. You see how easily you can go down that rabbit hole of despair when you're missing trades, making mistakes, so on and so forth. You got to catch yourself, and then all the other stuff we talked about today. There's, the Bookmap webinars you can always get them. They upload them. You can watch the replay. I do this every day in my room. Come on by. My course should be out here very, very shortly, and then I'm going to have the spreadsheet available for you guys and the zone drawing stuff as a subscription. I will send out a mass email. Just go to my website, put your name in the email list, and you'll know when all that stuff comes out. All right, have a great week. I will see you guys next Thursday.